Hello everyone, and welcome to today's edition of We Answer. So today, I'm just helping my brother get his new house ready and helping him move. Today we answer quite a simple question. Now at the moment with the cost of living crisis, simple things like treating yourself to another car, it's not as straightforward as it used to be. In fact, it damn near seems impossible. So we answer, what is the best way to buy a new car? It's not actual advice, because we can only know individual situations. However, this is just a common sense approach and weighing up the pros and cons of each approach to purchasing a vehicle. So back in the day, it used to be quite simple, really. You'd find the car you'd want, narrow it down to 2 or 3, make your choice. I'll have a latte, please. Boom, you'd buy your car. But now, especially with how things are, there are multiple ways to buy it. So really, what is the best way to do it? One option to purchase your car is the same age-old option, as is always a choice. Ye olde cash. Although if you can get a car for 20 quid, that'd be interesting, probably in pieces. Now there are plus points to buying a car with cash. If you're someone who likes to do everything in cash, and then there's no change to how you do things. If it helps you track your spending, then there is that. If it's only a couple of £100, it's not the end of the world. As in, it's quite easy to obtain that amount of money if it's a few hundred, maybe up to 1,000. But then when you're getting into higher figures, that is where it becomes a little bit more problematic. So cash for buying a car is good in terms of small purchases. But the bigger purchases, I can speak as someone who's worked in a bank, and not just in an admin role, as in customer facing in the branch role. When it comes to doing a large withdrawal, that is where it starts to become problematic. And it's not problematic as in the bank won't give you that money, but as in the checks we have to do may feel a bit invasive, and questions that have to be asked may not be questions you wish to answer. However, this is gonna be incredibly blunt. Do you honestly fucking think I want to ask you those questions as well? It'd be far easier for me. You go, can I have £5,000? What for? Buying a car. Get out my drawer. There you go. That'd be so much faster for me than asking about your ID. Have you got this? Have you seen the car? Have you done this? Have you done that? Have you done that? The problem is there's so many fraudsters out there these days that we have to do it. And I'm going to speak generally now, because a lot of customers in the branch are lovely people, so unfortunately they're going to be tainted with the same brush. But your arsey answers to my questions to make sure that I have done my job properly make me more suspicious of your transaction. And if you're wanting to have masses of cash, then it just makes it even more questionable as we go. If you're talking, I'd say, well, it depends on the individual bank or building society you're withdrawing the cash from. But I would not be surprised if across the spectrum anything over 5,000 starts to raise eyebrows. And that's regardless of whether you're a private customer, personal customer, even business customer. Anything over 5,000 is probably going to start looking dodge, if we haven't already thought it is dodge. And now if you really want to do it as cash and you insist on having to do it as cash, 1, make sure the money is available. 2, make sure you've got ID, because big transactions, the bank will want to see ID. It's not rocket science. And guess what? If you're buying a car, the best form of ID you can bring is your driving license or your passport. They're the 2 best forms of ID for this. Even if it's an old school paper license, that's better than nothing. It works fantastically. It's mostly accepted. In fact, it is accepted because it is your driving license. Granted, there are a few extra checks that have to be done, but it is accepted. The other issue is, of course, your bank may not have enough money in to do your withdrawal. Now, this doesn't mean that we need to go and reenact that infamous "Give me my money" scene from Mary Poppins, the bank run scene. It's not that at all. It's a simple question of risk. It's why you cannot just walk in and ask for £5,000. I worked in a little branch. Now, £5,000, especially towards the end of its time before the branch closed, £5,000 was easily 2 or 3 days deposits at one point. That's cash deposits, never mind the cheque. In fact, cheque was becoming increasingly rare. So if you come in and want to withdraw 5,000, that's suddenly a lot less money that the bank's got to have to plan ahead. And each branch is only allowed to hold a certain amount of cash for risk purposes. And even then, potentially, we've got to make a special request to order it in. That request to order it in costs the branch money. And people go, well, cash keeps the branch. No, it does not. Cash transactions do not keep branches open. It's the other side of things, doing loans, doing bank accounts, doing credit cards, mortgages. That is what keeps the branch open. Paying in cash and withdrawing cash only adds to if the branch is broken down, like any other business on the high street, into a profit and loss sheet, the cash side of things only seems to go in loss. If you have to go above your branch's holding limits, you've then got to get special permissions from people higher up the organisation, and you've got to then justify that, and even then they could overturn it and say, we're not doing that withdrawal for you. Which I do have to side with that it's not fair. The customer has made the request, but if you think about it, where I worked, a cash order cost over £100 for the branch. When you can, and now some people might say, yeah, but you're getting in thousands, tens of thousands. Not necessarily, not all the time. It was something like £100 for an order and £100 for a return, which are typically done, at least in the bank I worked, and they were typically done at the same time. So out of that, that's 200 quid, and if you're not sending back very much, that's actually quite a big chunk on your loss sheet. But when you compare that to the pennies that it costs for a transfer, that's why they prefer to do the transfer. It's nothing to do with, it's not necessarily just about, well, we don't want to give you the cash, because that's far from the case. But it creates a trail. You know, if you come to me at the branch I worked at and said, oh yes, I need £5,000 cash because I'm buying a Vauxhall from the Vauxhall dealership down on Ram Meadow. I know that dealership. I walk past it every day when I worked in the branch. I usually had a look at what was on the used forecourt because, being a car person, I always keep my finger on the pulse as to what's going on. But doing a bank transfer, knowing it's going to Vauxhall, it'll come up confirming it's gone to Vauxhall, eases everyone's minds. I suppose the other downside to doing it's cash. I'm sorry, I've just realised what I wanted to be a short, punchy 10-minute video is not going to happen as a short, punchy 10-minute video. Or at least it's not going to be as short as I'd hoped. The other problem with cash is if you've then been defrauded, it's a lot harder to prove the fraud. It's not impossible, but if you're doing it through bank transfer, for instance, using that Vauxhall dealership as the example, when I did a transfer of one of my customers, it pinged up saying, Vauxhall, Bury St Edmunds. Fantastic. I called the dealership as well just to confirm. Bang, sorted. All on the level. If you then turn around and go, well, I sold a dodgy car and this and that, and we'll do what we can to help. But it is incredibly hard for me to help as much as you deserve. It's not the bank wishing to be awkward. It's not your bank or building society not wanting to help you at all. But the job has become immediately harder. Look, I suppose the best example, a good example, might seem nonsense, but a good example. The back of this shot looks a little bit bloomy. It looks like I'm going to see Theoden King stood there going, where is the horse and where is the rider, from the second Lord of the Rings film. It's gloriously sunny. We've got a bit of, I would have described as an Indian summer, but I gather that is not the right term for it. But anyway, if I wanted to walk into Bury St Edmunds from where I live, put my sandals on, put some trainers on, lovely doubly. Might get a bit hot, but that's it. In this weather, it'd be like me putting on snowshoes with crampons. Not going to have that much difficulty walking as such, but I've made my job harder. It's already hot enough without putting on snowshoes and crampons. There are easier ways to do it. Another way you can easily purchase your car, it again depends on the amount you're buying and the dealership, is with your debit card. Now, this is not my actual debit card for people who get cheeky. That is just to, for illustration purposes. But when I went and bought this can of Coke as part of its bigger box, oh, that's so hard not to neck that. It's been in the fridge. It's so cold. It's lovely. But anyway, card machine, using my pepper grinder as a demonstration card machine. Paid for that, for the box. Beep. Done. Now, realistically, you're not going to buy a car for that little and do contactless. However, why, when the dealership has the card reader infrastructure, yes, they might have a limit as to how much they can do, and depending on what car you're buying and the price, you might run into a limit with your individual bank or building society as to how much you can actually make a payment for. Usually it's somewhere in the high tens of thousands, if not approaching the 100,000. So we're talking sort of 60, 70, 80 plus that usually you can do. You might get a quick phone call just to confirm it is you, or a text message to say, we've seen you making a payment at Sesson Lata Sayat for £40,000. Was this you? And you reply yes, and typically that's the end of the matter. And that can happen any time. It's happened to me when I was paying for petrol. I was in the arse end of nowhere seeing a friend of mine a few years ago who lived in the beautiful countryside outside York, but as far as I'm concerned, it was the arse end of nowhere. My card was declined at the petrol pump. Nothing I'd done, it's just a random decline. And that can just as easily happen at petrol station, supermarket, online shopping, purchasing a car, you name it, it can happen any time. But the debit card, unless you're doing contactless, but even then, the card is still there, so it's not like you're doing a card holder not present payment. Even then, they could potentially do a card holder not present payment over the phone. But if you're typically going to go there and make your payment, probably your deposit, quite commonly, because I paid £3+ grand deposit on my Slates when I bought it through with a debit card. That is, made the deposit with the debit card. That was fine, sorted. Went through, JD, job done. Just had a quick notification on my phone from the Starling Bank to say payment made. Plus points of your debit card, you've usually always got your debit card on you. Your bank's got all its own security protocols. The branch you're buying from, as in the dealer, they've got their own protocols through that. They'll list any costs involved for doing that. You'll get your receipt, they get the receipt, it'll be on your bank statement, and you can tie it all together. Going back to the cash example, granted, if you were withdrawing £5 grand cash to buy a car, you'll probably know you've withdrawn £5 grand cash to buy a car. But sometimes when I withdraw cash, I don't use cash very much anymore because I don't buy an awful lot of stuff. I used to buy a lot of things, but because I'm quite fat, you can guess what I used to spend my money on. And now, as part of a weight loss program through Addenbrooke's Hospital, I don't use my debit card very much. Basically, it's only petrol now. So if I withdrew cash, I wouldn't necessarily know what I've withdrawn it for. If you're someone who does a lot of large withdrawals, cash would be the problem. But if you don't, then you might know. But anyway, it comes through on your statement, it all lines up, and especially if they make a cock up, you've got the verifications through Visa, through MasterCard, and that's that. Nicely sorted. JD, job done. And you've got the additional benefit of counter fraud measures, so if it turns out it's a fraudulent transaction, then you've got a better chance of getting your money back through your bank. Depends on the bank or building society. I know the one I work for is very good on the fraud front, but there are some that are absolutely shocking. But again, that's down to the individual bank or building society. The other plus point with the debit card is if you're a little short on the money, most people got a banking app of some sort on their phone, that is. Just quickly transfer some money around if you're a little short, or transfer it back if you've transferred yourself too much. But the other thing is, I suppose, if you're not quite with doing it all on the app, if you use telephone banking, assuming that all the accounts you're doing it through are in the same bank, or at least set up on the relevant account, you could then call telephone banking and then ask for a transfer to be done between your accounts. JD, job done. But for your debit card, that's where it starts to become, it's not problematic, but I've come across instances where customers have been told, oh no, we can't do a debit card payment for that amount. And it's simply because it's then turned out, when we've said, well, you can, that's just down to the individual place, it's turned out because it's been late in the day, close to closing, so the dealer hasn't really wanted to fart arse around doing the payment, which is wrong. And if the dealer fart arses you around doing it with that, then you either go in and demand more money off, or just say, right, my money's going elsewhere. Or it's turned out that the person didn't know how to use the card machine, which was not very reassuring, because it was also, one of them was also a dealer I'd nearly bought a car through. But your card is a powerful tool. Why not use it? Of course, one way of getting a car is going through something called PCL, or personal contract lease. So you don't actually own the car itself. You put down a deposit. Sometimes it's a few hundred, sometimes it's a few thousand. It varies by manufacturer and varies by offer. You don't own the car at the end of whatever the agreement is, 24, 48, 36 months, maybe even longer. At the end of that agreement, you then sometimes given the option to buy the car. Sometimes it's just a case of hand it back, get a new one. Plus points of going down the lease route. New car, often servicing is included. You may actually be able to get what you want. And especially with the supply chain issues at the moment, they may very well actually have a stock of something. There may very well be a lesser waiting time. Downside, excess mileage costs. So if you go over the projected mileage, then sometimes you're talking only a few pence per mile, maybe even up to pounds per mile. But if your lease has been done on the arrangement of 8,000 miles a year, if your lease has been done on the grounds of 8,000 miles a year, and you go over it by 2,000, then suddenly, even if it's a penny per mile, suddenly that's a lot of money to find. Servicing isn't always included, and you're stuck with whatever they have bought in. So what I mean by that is, if, say for instance, when I first was looking at a car, I nearly went down the lease route, and I nearly went down the route of a Volvo V40. The Volvo V40s that they got in were R design 1.6 petrol with the winter pack. That was it. They didn't have anything else on. So if I wanted something with the power memory seat, for example, from that particular dealer and by that particular offer they had, tough. Wasn't going to happen. Lease is also something you might be able to get through salary sacrifice through your job. So you might be able to get some money off at that point of sale, and things might be a bit cheaper. But there may be benefit in kind taxes that are applicable. So it pays to do your homework. Lease is not a bad thing to do, but it really is something you have to consider hard if you're going to do it. Another way to buy your car is just through a good old-fashioned bank transfer. So by good old-fashioned bank transfer, we're talking about the faster payments. Most people will be buying it through that. You might have to do a chaps if you're talking the exotics and earn over £100,000, which usually carries a fee to make that sort of transfer. But a bank transfer, it's good if you've got the money, so whether you've just saved or whether you come into money through inheritance, or if you've done something like take out a bank loan, money's in your account, and then you're going to pay the dealer. Bank transfers are obviously covered by your bank, so if there was any fraud involved, you've got that extra protection, bank or building society dependent. You have, for just about every single bank now, as far as I'm aware, we're all meant to be on it. There's the confirmation of payee system, which is particularly good if you're buying it from Joe Bloggs. So if I was going to go buy, Sarah would like a Vauxhall Corsa, potentially as her first car. If I went and saw a Vauxhall Corsa for sale down the street by Joe Bloggs, and I went to go make a transfer, and it said, actually, it's John Smith, the bank account in the name of, then you've got the things to begin like, hang on a minute, you've told me you're Joe and there's no John. Very easily go from there. Transfers are also ridiculously fast. So again, in that scenario, assuming it was Joe Bloggs and the Joe Bloggs came back on the bank account, Joe Bloggs would be able to check his account within a few minutes, and he'd be able to confirm that I'd made the payment. It's fantastic. Same thing when I paid to the movers when I moved into this house. They were on the van outside. He gave me his bank details. I transferred the money, and he knew within a minute that it was there. That a lot, although how quickly depends on the bank's technology that you're using. But bank transfer, probably the most simple and the most straightforward. Another way you could potentially pay for your car is via the very old-fashioned cheque. Now I say very old-fashioned because cheques, they haven't lost their place in society at all, but their role is greatly diminished. Even with being on the image clearing service of 2 days to clear a cheque, it's still a massive inconvenience, because until that actually lands in the account, you don't know whether you're going to get paid. It's a bit like paying contactlessly. You don't always know, as the merchant, whether you're going to get that money or whether the payment's going to decline. Now, typically, it should decline at point of sale, but there we are. Plus point at the cheque, again, if you've got the money through savings, through inheritances, through a bank loan, that is potentially a good option for yourself. But in reality, it's quite inconvenient all round, because the purchasing team then got to bank it, they've got to make sure they've got the funds. So actually, you might have delays in receiving your car. Even if you're doing a private purchase, even though a lot of people have got the option these days to take a picture of the cheque on their phone and bank it that way, the problem with that is there's a limit on most of them. Now, the limits I've seen are typically around about the £1,000 mark. So if you're only selling a car for a few hundred, yeah, sure, but if you're talking into the thousands, that person's then got to go to the bank or the post office to pay it in, and they may not have either of those particularly local. So not fantastic, but not a bad option. There is also the traditional old hire purchase that you can use to buy a car. So you put down a deposit, you have a then dealer finance, you pay the amount for whatever time, so you might have an agreement of £300 a month for 36 months. And at the end of that 36 months, that car is yours. There's no balloon payments, there's no option to purchase fees or anything like that. Boom, it's all done. Downside of hire purchase is those monthly payments are typically a lot higher. Now, depending on your perspective, you might turn around and say, well, you shouldn't be buying it if you can't actually afford it. Which, yes, that's a standard thing, that's a given when they go through the I&D, income and expenditure assessments. And that's the same whether you're going through the lease, whether you're going through a loan, whether you're going through PCP, hire purchase, you name it. There's quite a few different ways you can go about it. Hire purchase is the way I would like to purchase my car, or at least one of my preferred ways. Unfortunately, I've just not had the disposable income at the time. If you're someone who likes to trade in your car quite a lot, hire purchase may not be the way for you. However, if you're the sort of person who likes to trade their car in, say, every 5-6 years but pay it off in 3, then fantastic. You haven't got to then worry about replacing it. You've still got to stump up the deposit. Deposit is variable depending on the manufacturer and whether you're buying new, used, etc. Although increasingly more places are insisting on quite big deposits. The main plus point really is at the end of the agreement, that's it. The asset is yours. The car is yours. No option to purchase fee, no balloon payment. It's one of the tidier ways of buying. Something very similar to hire purchase is something called PCP, Personal Contract Purchase. Now, this can of Coke that I've got out the fridge, lovely and cold. I'm going to put that there for a few minutes because it's really hot. You might be able to see I'm quite hot in this kitchen as I do this. But I've bought, say for instance, under hire purchase, I bought this can of Coke. That is it, that is mine. Excellent, fantastic. But under personal contract purchase, I've only put down so much and I have to then pay it off. So if I'm allowed 3 sips of my Coke before I have to buy any more, tasty and cold. Now how much I got in there, I've got to now stump up the rest of the cost to put that in. Bit of a very simplistic example, but use my Slates as the example. When I bought it, I put down £3,000, which covered some negative equity on the Baleno, but not as much as other dealers. If I'd gone ahead with the Skoda that I nearly bought, then I'd have had to put down nearly £4,000-5,000. But anyway, £3,000 down, so it was about 2,800 I think in total was my deposit for the Sways. So 21,000 out of the £21,000 purchase price, 2,800 done, dusted. Now I'm paying £217 a month for as long as John Banks would do it, which was 4 years if I remember rightly. But in 2 years' time, when that agreement comes up, I've then got to either hand the car back, which if I'm over my mileage, which I think I'm going to be at the rate I'm putting miles on, I've then got excess mileage fees to potentially deal with. Potentially the negative impact on my credit record if I hand the car back. I can hand it back ahead of the end of the agreement, but there's the negative impact to my credit file. The other problem with that, then there's also things like the option to purchase fee within all that. But the biggest thing with that in this example is when it gets to that end point, I then still owe about 11 and a half. I'm going to say 12 just to cover off in case I'm remembering the figures wrong. But I'm going to owe just under 12,000 for that Swace. And the downside with that is if I treat that Swace badly and just slap miles and miles and miles and miles on it, or if the car market bubble bursts, I'm going to have an asset that I'm paying money off on, I need to find £11,000-12,000 to pay off, that may not be worth £12,000, and then I'm stuck with a car whilst I get myself out of whatever hole I've got myself into. PCP is really designed for people to keep changing their cars, and that's probably what I would be doing now, or at least in about a year's time, no more than that, if the car market and prices had not gone up to the degree they had done. So if I could buy an SZT Slates again, including the going for metallic paint, which is about 600. So if I could get that for 24, which I think is how much it was supposed to be, I'd be probably just going in again, getting a new one, JD, job done. Personal contract purchase is a fantastic way to get on the car market. You can do it with zero deposit, but your monthly payments will be higher. You can put in as much deposit as you want, get the payments down. But then if you've got a big deposit, maybe you're just better off looking at hire purchase and knowing the car's yours at the end of the agreement. PCP is the way I've bought all 4 of my cars over the years. Maybe it wasn't the way to do it. No ifs, no buts, no coconuts. But plus points of PCP, monthly payments are typically smaller, more accessible for everyone. Applies to just about any model, new, used, you name it, it's all there. Down points, you've got your balloon payment, and depending on the manufacturer, you might not be able to refinance it. You're committed to doing something. You're committed to refinancing. You're committed to changing the car. And every once in a while, when you get a car, there's just one you gel with and you don't want to replace it. Some people feel that about every car, but for those of us who love cars, every once in a while there is one that's just like, nah, I don't want to get rid of it, but you might be forced to. Not ideal, but it is something to consider. Perhaps the easiest way to buy a car, and it's the way if I can't afford to go hire purchase, this is the way I think I'm going to go in future. And again, some people of a certain generation probably go, nah, if you're having to do that, you can't afford it. And to be fair, they may have a point, but my response is, fuck off. The other way I would consider buying a car, and the way I prefer to do it, is through a standard bank loan or a specialised car finance loan. Now, the advantage of a standard bank loan, interest rates typically very low, sometimes even lower than what you can get on things like PCP. At one point, the bank I worked for, granted this is before the rates went up, did a loan with an interest rate of 2.8%. PCP was 5%. So I wasn't looking at to change my car at the time. If I'd known, I probably would have shunted things around. Refinanced a loan I got to put money down for the Slates. I got 2.8% for that. So maybe I should have tried to get an even bigger loan and just bought the car outright. Now, the plus point of doing it on a personal loan is best example would be if you were to go apply for a loan with Tesco Bank, if you're a club card customer, you're more likely to get a preferential interest rate just because of being a club card customer. You might find the same with your high street bank or building society, that you might get a preferential rate just because you've got accounts with them. That's not guaranteed, though. The rates they quote on the website will always be the representative, so it means at least 51% of people get that rate. Doesn't mean that you will. Other plus point is there's no penalty on that interest rate for if you're buying a new or used car. Now, if you're going to buy something on PCP, for example, the interest rates for a new car are so much lower than if you're buying for a used. But if you consider that when I got my Slates, the interest rate on that being brand new was 5%, and then they're going to charge 14% on a used, what's the point? In fact, if I remember rightly, I was dissuaded from buying a used Slates that John Banks had in their forecourt when I was looking, because it was a few £1,000s cheaper, but when he ran the numbers, that out there is cheaper, being brand new. The used would have only been cheaper if I'd been a cash buyer. Also, you can overpay on them a lot easier than you can do on your car finance, so I could make an overpayment to my car finance, that's not a problem, but I won't see it in my payments going down or the term of the loan being reduced. Whereas if, using Tesco loans as an example, because I've done this many times with them, if you make an overpayment to them, you get the choice of reducing your monthly payment or your MAR, or reducing your term. So that basically brings the end date forwards. Now, not all banks do that. Some of them will only reduce the term, some will only reduce the monthly payment. So if you're going to start overpaying, it's really worth the time checking your terms and conditions. But if you've, say for instance, done a lot of overtime, ka-ching, made bank, you've paid what you need to pay, bang, slap it off your loan. get that car yours a bit sooner. Certainly not a bad idea. Or you're saying, no, done your overtime, ka-ching, been paid. You know what? I want to actually have my monthly payments a little bit less for a while. Boom, done. Downsides of the loan: if you've got bad credit, you're not likely to either get the loan, or you're not going to get the interest rate that's been advertised, and potentially you might be better off taking your chances with the car finance. However, whoever you apply for the loan through, always make sure they've got a FCA registration number, because if they haven't, run away. FCA is the Financial Conduct Authority. That basically means they apply to various lending rules and terms and codes of conduct when it comes to lending. If they're not signed up to it, don't touch it. There's tons of loan companies out there, and some of them are very questionable. And when you start looking into them, hang on, where's your FCA registration number? Oh, no, thank you. Don't want to do that. It's probably why you're better off sticking with a more recognisable brand, whether that's your high street banks, your TSBs, your HSBCs, your Barclays, and so on and so forth, or whether you want to go with a more online bank like Sainsbury's, Tesco. There is another way you can borrow money to buy a car, and to me, it's not really the best way to do it. I'm not a financial advisor in any way, shape, or form, nor am I a certified mortgage advisor at all. But in my head, from my financial training and what I was taught when I was doing my initial customer job, it does not seem like the right way to go. Another way to do it is you could take equity out of your house and put it on your mortgage, so do some additional lending to buy a car. Plus point, I guess, is depending on where you are in your mortgage term and your age and so on and so forth, you might actually be able to pay it off over not just 5 years, but 5, 10, 15, 20, 25, even more. So your monthly payments could be negligible in that regard. But if the interest rates on mortgages keep going up like they are, which to me just seems, I'm not going to get into it, but if the mortgage rates keep going up, your monthly payments will start going up, and you won't always be able to extend the term. You won't be able to change the method of repayment, or at least long term. You might be able to put it on interest only for a little bit, but again, not really the way to go in my opinion. Now, if that said, if you've decided you are keeping a car, or you've got a very small negligible amount outstanding, so say for instance, I don't know, when I worked for Santander, I'm sure at the time our policy was you needed to borrow at least £15,000 for additional lending, I think. Could be wrong, but it was quite a large amount. Now, if you need to do some home improvements that don't quite come to that, guess what? Roll your car finance into it, get that paid off, boom, bang tidy, whatever you want. So there are some circumstances where putting it on your mortgage does make some sense, especially if you've got, I'd say, sub 10 on it, or if you're buying a car. So if I said to Sarah, I'm going to go buy as a one-off purchase, and I'm going to run it into the ground until it explodes on the side of the motorway, I'm going to go buy myself, Peugeot 508, going to go buy a Land Rover Discovery, going to go buy BMW 5 Series, Volvo V60. That might be the only scenario I can wrap my head around where it makes sense putting it on. You're making a one-off investment, you're planning to run that damn thing into the ground. Sure, why not? That makes sense. But if you're going to go down the mortgage route, for God's sake, speak to a broker, speak to your mortgage advisor, speak to someone certified. And if in the whole process, not just the mortgage process, in any of this, if you're not sure what to do, contact an independent financial advisor, because they can tell you what to do. Whereas myself, you could ask the counter staff in your local bank or building society. Depending on your organisation, well, I'd say typically most high street banks, we're not financial advisors. I can be a sounding board. So if you've got a really bad idea, I can say that using my own common sense, it sounds silly, but I can't say no, don't do that, do this. It's not ideal. So there we go, that's the end of this video. This was, like I said in one of the sections, I wanted this to only be a 10-15 minute video, and we've gone well past it. I'm going to try and keep the edit choppy and short to try and get it as close to being as short and sharp and punchy as I want it to be. As I said at the start, this is not advice in any way, shape or form, because I can't give you advice. However, be aware of the pitfalls of whichever method you choose, whether you're just fortunate enough to have the cash, the assets, to then bank transfer, cash, cheque, to buy the car, or whether you've got to go down the finance route, which I'd say most people have got to go down the finance route. Obviously, pay attention to what the dealers are offering. Be very aware of your options. So not just the options of, and I'm not just talking about, well, actually, you're going to spend all this on a BMW 3 Series, but you could spend just as much and have a far bigger car if you want to buy a Peugeot 508 sort of thing. Not just that sort of thing. But be aware of your buying options. So is it better for you to go PCP? Have you got the money to go hire purchase? Have you got enough money in your savings that you could release to give yourself a big deposit, regardless of which way you're going to buy? So even if you're going to go down the personal loan route, even, I don't know, say you need a 20 grand loan, but you've got 6 grand in savings that you're sure you don't need, then potentially do that and only get a loan for 14,000 rather than 20. But if you're going to start putting savings in, be bloody sure you don't need it. And likewise, on any of the finance options, if you're going to start overpaying, be bloody sure you don't need that money before you've paid it. Once that money is paid off, you cannot get it back out again. Be very careful. Obviously, you know your own situation the best. Don't let any dealer, friend, family, what have you, push you into what you want. If you've got a family member who is knowledgeable on cars, yes, get their opinion on what they think the best way is to do it, and get the opinion on anyone you know who's good with finances, whether that's just someone who's a bit, I won't say frugal because that's got not of negative connotations, but someone who's careful with money. Someone, if you've got a friend who works for a bank, maybe get their opinion because they could give you an on-the-fly, off-the-cuff sort of, it makes sense, it doesn't make sense sort of opinion. As always, pay attention for the offers, especially if you're blue light, eligible for a blue light card. There are some manufacturers such as Skoda you can get money off through. So maybe pick a different brand. So if you were going to go buy an Alfa Romeo, actually that's maybe not a fair comparison. If you were going to go buy, I don't know, a used Audi or a BMW, maybe you could get more money off and have a newer car if, say, you went to Skoda or wherever else. I suppose, especially in this time where interest rates are going up, no one knows what the right thing is to do is. As in Joe Average not being completely sure what the right thing is to do, and not just the UK economy, because, well, I'll sit and die on the Tories have fucked us over hill until I'm dead, come back and die again on it. But there seems to be a trend everywhere that interest rates are just going up and no one knows what is going to happen. Apologise, I realise I've been wandering around a lot. This video, it's helped me to sort of use my hands and talk. So I apologise if it's a bit off-putting. But anyway, that's the end of this video. Hopefully this is not the end of that glorious sunshine. No Theoden King is not about to come through that door, with the way the light is blooming in the background. But anyway, I realise I keep going quiet on this channel. It's just life at the moment. And I suppose the other thing is, there are times where the fun has not necessarily gone for me for doing these videos, but if I keep pushing them out too fast, the fun will go, if that makes sense. Please like and subscribe to the YouTube channel and help us grow. I know I've got hardly any followers, but just please share this around and help the follower base grow. Like the Facebook page, increase that coverage there. Again, I apologise I keep going quiet on there. Again, it's just life, work, that keeps taking my time. Hopefully this heat we've got stays for a little bit longer in the UK. Please drive safe, stay hydrated, particularly. Watch your dogs, your cats, be safe, drive safe, look after yourselves, and we'll see you next time.